Welcome back to Iraqi Dinar Hub. This moment in June of 2025 represents a milestone that many within currency communities have been anticipating for years. Yet, it is important to understand why this period is attracting heightened attention. Rather, the focus from analysts centers on broader global financial conditions that together have created one of the most dynamic and observable environments for emerging market currencies in over a decade. This is a landscape shaped by economic transitions and regional restructuring, providing a rare opportunity to observe market behavior up close. Whether an observer is analyzing macroeconomic indicators, monitoring nuanced budget reforms in oil-producing nations, or tracking trade developments in Southeast Asia, the current environment is unique. This includes measurable indicators such as national inflation trends, foreign reserve updates, new legislation impacting finance, banking modernization efforts, and signed trade agreements. These are the metrics that genuinely shape currency behavior. These foundational developments, grounded in verifiable facts, form the framework through which currencies realistically fluctuate over time. This is why longtime observers of currencies like the Iraqi Dinar and the Vietnamese Dong are paying particularly close attention at present. It is critical to emphasize that this focus is not driven by supposed private bank events or confidential invitations. Instead, attention is concentrated on how domestic reforms align with broader global trends, such as changes in energy markets, diversified supply chains, and new bilateral agreements which may gradually influence currency stability and potential appreciation. What makes 2025 so significant for economists, institutional analysts, and global market watchers is the convergence of multiple verifiable factors. Regional investment flows are rising as capital seeks new opportunities. Neighboring nations are adjusting monetary policies, producing ripple effects across the region. Global demand for manufacturing and energy is shifting, directly affecting economies like Vietnam and Iraq. Additionally, the ongoing digital modernization of banking in these emerging markets is steadily enhancing their integration with global systems. It is essential to maintain realistic expectations regarding these changes. That narrative belongs to speculation, not rigorous economic analysis. These developments, however, create environments where measured fluctuations are more likely and provide a transparent view of long-term economic growth trajectories. Understanding these factors allows investors to recognize genuine opportunities for moderate, sustained currency appreciation rather than chasing imagined overnight gains. In Iraq, for example, recent months have seen tangible reforms in fiscal and financial structures. Efforts are underway to reduce cash-based transactions, strengthen compliance with international banking standards, and implement transparent budgeting practices. These changes also target corruption risk reduction. Such verifiable improvements are the true focus of observers. As they lay the groundwork for long-term stability and eventual global integration, excitement may arise naturally, but it is crucial to separate structural reforms from exaggerated claims of instant reevaluations. These reforms in Iraq are long-term in nature. While positive for economic stability and investor confidence, they cannot produce sudden or extreme changes in currency value. Rather, they signal that the economy is gradually integrating into global financial systems, creating the conditions for incremental strengthening over time. Similarly, Vietnam demonstrates steady, authentic economic growth tied to expanding exports, global demand for electronics manufacturing, and large-scale infrastructure projects. These factors contribute to gradual currency stability and potential long-term appreciation. Without generating unrealistic short-term spikes, this understanding is key to interpreting recent market activity. As Vietnam deepens integration into global supply chains and companies diversify manufacturing locations, institutional behavior naturally shifts. Banks and large financial institutions adjust portfolios to align with evolving risk and opportunity assessments. These activities are normal and do not signal sudden, large-scale currency reevaluations. Responsible investors must focus only on independently verifiable information. Real monetary outcomes are shaped by central bank releases, public legislation, economic reports, and credible financial analysis, not by unconfirmed private channels or social media speculation. Viewing this period as an educational opportunity, rather than a countdown to imagined financial events, provides a more productive perspective. Understanding how currencies function, how national economies develop, and how global dynamics influence monetary policy is invaluable. Timing still matters, but due to actual economic conditions, such as interest rate adjustments, commodity price shifts, or trade policy changes, not because of hypothetical insider events. Temporary windows for strategic action exist, but decisions should always be based on verified data, expert guidance, and realistic expectations. Financial institutions stress that currency fluctuations, particularly in emerging markets, are bounded by natural limits. When trading volumes peak or volatility increases, central banks and large participants often implement policies to stabilize markets. Their goal is to prevent extreme swings that could disrupt the broader economy. Waiting for dramatic speculative gains is risky. Measured attention and careful observation of macroeconomic trends. Monetary reforms and trade flows remain the most reliable strategies. Observers with experience studying these trends can interpret developments meaningfully, seeing data in context. Impulsive reactions to rumors often result in disappointment. Currency movements are guided by real, slow-moving economic drivers. Export growth, inflation trends, foreign reserve levels, and banking modernization. Understanding the interaction of these factors offers genuine insight into potential opportunities. For moderate gains, without resorting to speculation, Vietnam's currency illustrates the importance of structural reforms. Its gradual integration into global trade and digital finance is increasingly significant. Banking modernization, electronic payment platforms, regulatory compliance, and financial transparency are quietly but profoundly strengthening confidence in the market. These reforms foster predictable exchange behavior over time, enhancing domestic and international trust without producing dramatic immediate spikes. Analysts highlight Vietnam's deeper supply chain integration, government investment incentives, and growing export competitiveness as key factors supporting measured currency strength. Patience, research, and observation of verifiable data remain far more productive than chasing rumors or unverified alerts. Recognizing actual trends, understanding underlying economic drivers, relying on reputable sources is the path to informed decision-making. Currency holders should focus on official central bank announcements, international trade reports, financial analyses from major institutions, and licensed financial entities. Supplementing this with professional networks or educational communities focused on economics provides context and perspective often absent from social media channels. Caution and awareness are paramount. Staying informed, connected, and analytical is far more valuable than pursuing hypothetical opportunities. Education and preparation form the foundation for financial security. Real value lies not in hype, but in understanding the fundamental forces shaping a nation's economic trajectory. All information shared on this channel is educational and informational, not financial, investment, legal, or tax advice. Currency markets are complex, volatile, and unpredictable. All investments carry risk, and past performance is not indicative of future results. Actions taken based on this content are at the viewer's own risk. Claims of guaranteed rates, exclusive access, or secret opportunities should always be met with skepticism and verified through licensed institutions. Education, preparation, consultation with qualified professionals are the most reliable tools for informed decision-making. Thank you for joining us at Iraqi Dinar Hub.